Good morning, everyone. Happy Monday. I'm a little early. Well, here we are, folks. We're in the past the middle of the month now. What's up, Travis? How's the coast? How are things in BC? Hey, Jam, what's going on? Well, markets are working pretty nicely. We have our overnight inventory is long, and then we'll do a series on how we trade it. Yeah, exactly. I'm listening. So we are like, if you looked at it right now, we're inside Friday's. We peaked above Friday's high and said, nah. We got into that gap and the sellers started pelting us with contracts. So we came back down. You can almost think of the previous day highs like a roof. You go up on the roof, and you get pelted with hail, and you come back underneath. So there's selling up here. So we're back down here. We're going to open in Friday's range and in its value area, which is a fancy way of saying cost basis. So it's going to be business as usual, right? So no change to Friday's prices. That means we're going to just go back and forth, right? Oh, nice and warm down there. So you could see we're in distribution. We took all the cheap crap see, Friday we liquidated at the end of the day, right? So you liquidate at the end of the day. That inventory gets taken and then resold at nighttime for profit, right? So the markets are working. Now inventory's long because probably 80 to 90% of the trading in the Globex or night session is above the Friday close. So we're looking for a move back down. I'd say 75.11. If you're shorting, if we can get under 26, right? If we can get under 75.26 and stay under it, right? Well, your first target will be VWAP. And then if we can break 11, look for 75. I mean, break 16, we'll be looking for bids at 75.11 on an inventory correction. So not really. I mean, they're not huge trades. You can make some decent money. I shorted 36 down, and it was a nice little trade. Nothing really. I've only done one trade. I shorted 75.36, 37.5 was my stop. And just as soon as it dropped into the 26s, I was really quick to cover 26, 27. I was done. And I haven't done anything else. And I waited for that trade. I kept looking at it and we were going back and forth in this purple area. That's 4 times cost basis. And I was like, I couldn't find a spot to go along that made sense. So I said, I'll just wait for the look above and fail of 75.44. And I was away from the screen when it did this. So I missed the top, but there's still, I didn't come into the trade until later. but there's still a decent amount of, decent meat on the bone in that trade. Now, the point of control, which means we've sold a lot of crap up here that we bought down here. That's the simple market profile, you know. Market profile is just telling you where your crap is priced, right? That's all it is. Yeah. That's all market profile is. It's a very nice way of seeing where you bought your crap, how much you paid for it, and whether or not you're selling it for the same amount of money, a premium, or a discount. That's all. That's all there is to it. Everything else is like really, really, it sounds really smart, right? Hey Raj, what's up? What's up, Marcus? How you doing? Yeah, I had one trade, and like I really wasn't. I missed all of this, and I finally clued in here. It's okay. I am listening. It's Monday. It's the middle of summer. We're supposed to be floating on those things in a pool right now. We're not supposed to be in front of screens, right? You know those things that people float on with the little drink holder? And they have that little drink with the umbrella in it? That's what we're supposed to be doing right now. Like my buddy Jack sent me a picture. He's in Mykonos. And he sent me this picture. He's having the time of his life. He's in front of the pool. He's got the laptop open, but he's not really looking at the laptop. You know? So, yeah, it's going to be choppy back and forth. Wait for your trade, it'll pay. One of the biggest mistakes I made when I was trading retail at first, I thought if I wasn't in a trade, I'm not making money. Then I learned to wait for your trades, and then you basically end up stalking your trades like a predator stalks the prey. Ooh, that's nice, Travis. That's beautiful. Where is that? Oh yeah, BC is just beautiful, isn't it? Nice. Yeah, that's what we're supposed to be doing. So make a little money, right? Or make a lot of money if the opportunity's there. If it's not, oh, shoe swap. Nice. Man, I do love BC. I mean, the place almost killed me, but I still love it? I love Vancouver. Even though it almost killed me, I still love the place. Okay, so we're expecting lower off the open. Now, do you see what I see? Okay, we're going to go open up here probably between 25 and 30, right? If we're short, there's your warning, right? This is your like goal line defense for shorts. If you're short here under 30, your out is 33. Because let's face it, if you lose that seller at 33, you don't want to be short because you're going to be getting bought in at 37 and then up here at 41. Okay? Do you guys understand what I'm trying to say? Those of you in the room should know what I'm talking about. So before the market opens, you go and you draw where your sellers are likely to be. And where they are going to be is the top of the previous candles. And dollars to note, donuts, they'll be there again. So mark off where your sellers are, and then mark off where the bids are. The bids are here at 26 and 23. So you know we're bid 20, 23, 26, right? So you've got your bids here. You could say 26 is a lookout bid. If those bids see size, they're going to drop down to 23, right? If these sellers see any kind of buyers, they're going to lift their offers up to 33. And then probably 34, you'll get a print, and then right here at 36. So if you're short and it starts taking out these higher levels, maybe just kind of cool your jets. You know what I mean? You guys understand what I'm trying to say? So if you're short here and it climbs over 31, 32, maybe start buying a few back and reducing your risk with size. If it takes out 33 and takes out 34, you've lost your seller, right? This is your backup if you're short. These are the people who are pushing price down because they're competing there. But if those people see buyers, they will raise their prices and you will have lost your seller. Once you lose your seller as a short seller, you need to go buy back your position. Otherwise, you're in trouble. You know, the concept of losing backup. Where's our retired policeman, Ed? You'll know what that's like, right? Let me use another example you guys will understand. You know when you're doing the bench press at the gym and your buddy's spotting you? You know, you've got a couple of plates on the bar, 2, 3 plates aside, and you bring those plates down, and you think your buddy is going to grab the bar if you can't make it. But a really pretty girl walks by and your buddy bolts, and you're left there with 3 plates aside. That's what's happening right now. Your seller has gone to chase a pretty girl. And you, my friend, if you're short 30, 29, now you're starting to suck wind, right? Now, I've seen this happen in gyms and I've seen this happen in bar fights. I've seen guys get into a fight because their really tough friend is standing behind them. And their really tough friend all of a sudden sees a really, really pretty girl and just poof, he's like Romeo Thursday and he's gone. And that's exactly what's happened to your seller here, right? Listen, trading is just business and you've got to use like examples that people can understand and visualize. Like you should be able to visualize that, right? You lost your seller. And I told you that if that happens, you should start be careful. What you want to look at is you want to look for it to go up and then come back in. This is the front end of the move. We corrected inventory, and now we're going to go. Now your buddy's chasing all the girls, which means all the stops, right? It's true. I've seen that happen so many times because I was a bouncer. Guy's getting into a fight. Oh, yeah, you think he's so tough? Next thing you know, he looks behind him. His friend, his tough guy friend is gone. You know, and he's wheeling some girl. And next thing you know, this guy's getting his face used as a piñata. Don't be that guy. Know your environment. Know where your seller is. Okay, so that's a good thing that, see, I told you to go right up to that 36 level. Now let's see what happens. And you don't need a DOM or anything to know that this is going to happen. Simple 1-minute candle chart, the ability to draw a straight line, and the ability to focus. That's all you need. And then all it becomes a matter of execution. So you want to keep your analysis simple. If this happens, I do this. If this happens, then I do this. If none of those things happen, I go get a coffee and watch everybody else get cut to shreds. We're going to be opening in the middle of this zone. It will be choppy. Let the large traders pay the bill. Let them find the bid and tell you where the offer is. Then we can just go boing, 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 trade it back and forth, right? Let them set up the ping pong table, then we can play. Until then, just relax, right? You don't need to come out of the gate like Secretariat when the bell rings, right? When the market opens, you don't have to, like, you're not a racehorse, you're a trader. Sit back, relax, right? And let the size traders show us where the order flow is. Okay? Simplify your life. Now there should be a seller at Friday's high. If there isn't, that would be very surprising. If we take out Friday's high, look for 42 and then 44 and 3/4. Okay? If we come back underneath Friday's high, which is 39, oh, there we're starting to accept above it. But the trade is still a little long. A little long. So if you're a buyer at 39, right? I'm just long 2 micros at 39 and a half. I sold one at 41 and 3/4. I'm offered at 43 and a quarter, and oh my goodness, there is a seller at 42 that's a little aggressive, right? Aggressive seller at 42. I'll get out at 41. That's fine. Watch the offer. Now, if we get accepted over 45, we're going to be into 8 times profit. 2, 4, 8. It's simple math. Anybody can do this. All you got to do is pay attention. There's no reason being short until we come back into Friday's range. I'll do 4 for now. What made you say the seller was aggressive? Because as soon as it got to my seller, he knocked me away like Dennis Rodman guarding the hoop. There's a video, Jimmy, in the video section about aggressive selling. I'll update it. I haven't seen a good one lately, but there was one where we got to a level and we were watching that level, and all of a sudden it was just like, bam, it just knocked it down like 10 points or something. That is an aggressive seller. I am an aggressive seller. When I have size, I am an aggressive seller. If I have 1 million shares to sell and you're in my way, oh, I don't, that's a bad thing. I will roll right over you. Say I need to move 1 million shares of stock. The stock's at $7. And my client says, just get me out of this crap because he paid nothing for it. So if the stock's $7 and I see a bid for like 400,000 shares at 5, I'm hitting it. I'll hit it. I'll hit it so fast it makes your head spin. And I will chew through all of you guys to get there. You see it every once in a while in the ES. So far, the price action in these markets is very family friendly. You just don't see it live because you don't know what to look for. In time, you will, Jimmy. If they don't take my offer, I'm hitting bids. I'm hitting bids so fast it'll make your head spin. I want us to look above the overnight high and then come back in. If you are shorting it here in the 42s and the 41s, If by chance, say you're trying to build a little short position, if it gets over 43, start buying them back. Your risk is 44 and 3/4, right? So if you're short 41 and change, drop a 39.5 bid, a 39, a 38.5. Put some bids in, see if you get hit. Because there's no use being short if you can't buy them back, right? There's no sense being short if you can't buy them back. Fantasy stories? No, it's what I used to do for a living, Grain Monk. So say you're short 41. Offer starts moving higher. Then now you know how to take them back, right? Yeah, if you've never been a size seller, you'll think it's a fantasy. And retail traders have never been size sellers. Pretty simple stuff, right? Like you young kids say, if you know, you know. And if you don't know, you don't know shit. Coming back under 44, wait for the next candle. It's just somebody trying to get cute on YouTube, that's all. Wait for the next candle. If the next candle can't open and stay underneath 44, be careful on the short. See? There you go. Wait for it. It's okay if you're a little late if you're short. Okay if you're a little late. Let the sellers tell you if they're going to raise price or not. If they're raising price, there's no reason to be short. If they have to lower price, the next candle, the high will be lower than these two, and so on and so on. And that's what you're looking for. You got to wait. No reason to short the front end of a move. See, you think you're going to short a level and you hit it, and then that level gets taken out. And then people will now add to it here, right? There is a seller just under 48. See the tops of these three candles? But now the sellers are lifting, right? They are raising price, and you don't want to be short when they're raising price. Cool. Filled the gap. Sorry, that was a gap fill, right? So we filled the gap. Filling the gap means we ran out of supply. Pretty simple. Here we are. Be looking for 56 3/4. We'll see how well it worked. It worked nicely a couple of days ago. Now we're going to backfill. I'm looking for bids at 45. New point of control is just here. Now, is this a look above and fail? I'll wait for the next candle. This is what I mean about the back end of the move. This could be it. Wait for the next candle, and if we can't get back up over 45, then you've got a short. Otherwise, it could be a look below and fail of 44 and a half, or 45 and 3/4. Sorry, 44 and 3/4. Excuse me. Ugh. See, they pulled the seller again, right? Give this candle a couple of minutes or a couple of seconds, see if it holds, and you'll want to be going long 46, stop 44, target 48, 48 and a quarter. I might be a little early on that. Yeah, I'm early. Now I know this is a seller at 48. I should have waited for this candle to finish. Bottom at 46. See if we can get a 47 print. If I can't, oh, got rid of one at 47. Need those offers to lift. Come on. Okay, got out one at 47 and 3/4. And I just got one left. And can I get out at 3/4 or do I have to take half? I'm out at 3/4. There you go. Not the greatest trade. Yeah, good entries feel like you're late, you know? I was looking for a short, but this candle told me no short. Not the greatest long, but this didn't get trapped in a short. We're right at the top of 4 times cost basis. This could go either way. It could just chop around here for a bit, right? It is still distribution, right? Cost basis is here. Distribution here. Let's see if we can move that up. Get that little purple thing to move up. This is just dancing off that 45 bid. This Jimmy is not aggressive selling. This is like a ballerina on the bids as opposed to a clog dancer, right? This is very gentle, controlled selling. This is so you don't scare the buyers away, right? So when you have a gap down, Jonathan, that means you've got excess supply. You can think of it as a storage cabinet. So because we had all these people trapped, we had a gap down, right? Today we ran out of supply this morning and we went into gap and we cleaned up all the supply in here. That's why we're kind of going back and forth in that gap. As we run out of supply, price will go higher to find sellers at higher prices because the supply underneath 41 is now gone. Exactly. Buyers are like like baby deer. You don't want to like scare them away, right? That's why you just like you sell, then you stop selling, then you raise price gently, right? And then they see and they just you can sell a lot of paper here. You can get rid of a lot of inventory up here. What we're trying to do is move that 2778 point of control up here. But as you can see now, buyers are coming in because we held price stable. Didn't break that 44 and 3/4, brings in buyers, right? Well, the shorts will get trapped as a matter of course. So does that make sense, Jonathan? A gap down is excess supply, right? So when you run out of supply, think of it as like a storage locker, right? Where we keep a bunch of contracts, but they're priced high, right? So if you run out of them at 5, you sell them the 7 kind. Get it? A gap, when a market gaps up, it's a short position. It's a lack of supply. How do I know this? Because I've gapped stocks up every morning for decades because my clients control the supply. Right? You can't gap something up if you don't have all the supply. Yeah, exactly. There you go. Old inventory. There, now you're cooking with gas, Jimmy. Nice. Good, good, good. And now we're going to do some distribution. When we did our morning call, we were down here. And I was telling you guys, I said, we're going to take this and sell it here. And guess what? That's exactly what we did. And then that price stability brought more buyers, which brought more buyers, which is going to bring in more buyers, right? Uh, only if the order flow. Just remember that, Milo. We may revisit the gap, but it might take 2 years. Okay? So you never try and front run a gap. You let the large traders do that. Right? If a market gaps out, you don't just automatically short the gap. Oh, here, look above and fail. Here we go. Here we go. Here we go. Let's see. Oh, come on. I'll wait for the next candle. I might be a little late. So you're looking for maybe 42, 43 shorts, right? And you're shorting this area, and your stop's going to be probably 45, 46, because that's the overnight high. If we get accepted above the overnight high, make sure you start buying them back. Don't screw around. Make sure you got some bids in at 42. All right. Have a lookout bid, maybe 42.25. Let's see what happens when the next candle opens. If it can stay underneath 44 3/4, then we can go ahead and sell the 43s. Come on. Sell like a normal market. Come on, come on, come on, come on. Come on. Oh, you rat bastard. Right? That next candle is there's your backup. There's your out. Right? You're short 43. You're covering 41 3/4, covering 41.5/4. Yeah. And if it breaks 41, you can stay short. Come on now. Oh, just sell off like a normal market for crying out loud. Okay, I'll take them back at half. Done. Done that way. There you go. Hey, Ron. How you doing? Good to see you. It's sticky on the way down. Right? It's like they rolled the contracts in honey and they're stuck to the side of the fridge. It's just because so many people are short underneath that previous day high that they're front running it. I miss the days when you just hit a market and it would just drop. That was the best. Now, what I'd love to see tactically is we get some suckers to come in and buy this, run it up, and then here they pound it down again. That would be cool. Let's see. Or we could just come right back down to 36. If we get accepted underneath Friday's high, right? Look for the half an hour low to get tested. Do you see how we're bidding right here? Boom. See the bid? There's the Friday high, right? Yeah, sorry, I use that word a lot, Milo. It's just being always the seller, right? It depends on how much competition there is. See, because Milo, there's more than one seller. So ATL's there, Jimmy's here, I am listening's here, you're there, Jonathan's here. You guys all have size and you're selling. And if you see that one of you starts lowering price, of course you're going to lower price. You have to be competitive. So when this next candle opens, see if it can open and stay underneath 42, right? We need to break this 39. That's the seal. Got to break the seal. Exactly. Best Buy price competition, right? Uncle Fred's House of Stereo. We will not be undersold. So I think if we can stay underneath the previous day high, you'd want to take a short down to the 30s. I just tried to sell 38 and it just dropped on me. Now you drop, bastard. So if anybody caught a 37, 38 short, your stop's going to be just above 39, and you're going to be looking, I would say, 32. Oh, thank you. I shorted 35. Thank you. And there you go. And I am flat. Man, I wish I was short more than 3 contracts. There you go, Jimmy. There's that aggressive seller. And just at the right time, too. Now, Milo, that's competition. Size traders get itchy, right? If you were long product here at 22 and you saw that it was taking some time, you can't get rid of stuff, you just slam it down. That is the basis of our look above and fail of 44. There you go. So you see the buyers running away and you chase them down out to the parking lot. Hey, Mike, what's going on? Remember, overnight inventory was like 80, 90% long. So to correct it, we need to come all the way down to 74.95. How do you like them apples? First stop is 75.11. We got to get underneath VWAP and stay underneath it. If we can get underneath 23, you see, once you take out 23, you're going to take all this inventory is not going to be happy, and they'll puke it out down here. right? Large orders need to get out, Jimmy. Size is not patient, not in this market. In the old days, size used to be patient. Now, because there's so many size traders, nobody's patient anymore. You can't afford to be, right? Potato gun camper. Oh, welcome to the room. I love that name. Oh my goodness, that's hilarious. You didn't play football in Regina, Saskatchewan by any chance, did you? Oh man. Because my buddy Mooner made a potato launcher out of surgical rubber tubing. And he could launch a potato for like 5 blocks. It was crazy. Hey Perry, Helen, how are you doing? I would always recommend replaying your charts at the end of the day. Just like watching game film in football, you know? It's rewinding these charts, man, it really helps. It'll drop down. We're looking for 15 and 3/4 if you're short, my friends, because remember we're shorting, looking for down to 11 and a half. Oh, well, it has to do with cost basis. So this is the blue area is the cost basis from earlier. This is 2 times profit, 4 times profit, 8 times profit. And if you go and look here, that's 2 times discount. See how we found bids at 23? They just stopped selling. It's going to go back and forth now over VWAP. If we can confirm a seller in the 26s, 25s, we'll start pushing lower. If we can take out this low right here, right? If we can take out that, stay under 23. Here we go. Now all the people who are long over 23 are going to be really unhappy, and they're going to start throwing it out the window. Come on. And no problem. Right? So the trade I'm setting up for now is a look below and fail of maybe 15 and 3/4. Now, if it slices through 15 and 3/4 like a hot knife through butter, I'll wait for a look below and fail of 75.01. Right? I had a couple of decent trades, so I always kind of sit back, um, unless the trade is really obvious. Right? If there's a really obvious look below and fail of 16, I'll take it. Right? I'll buy 17, 18, sell 21, 22. I'm perfectly happy with that on 3 to 5. Right? But right here, right now, I'll let the size traders, you know, let them deal with this, right? We know there's a seller at VWAP. That's a good thing, right? That's normal, right? You can see that we cannot clear VWAP, so we got a seller at VWAP. So if you're short on the way down, you can stay short. VWAP is going to be your danger zone, right? So if you're short under 25, if we start offering 26, 27, be careful, right? And your sellers are going to be here, right there. Next sellers will be up here. There we go. Dropping in nice. Right? Now the 20. Anyone who's long over 24s, they're starting to puke it out now, right? Come on, throw it up. What I'd love is a test of 75.11. I want to see how 75.11 and a half acts in RTH. That would be great. Like just right here. This would be a nice trade. A look below like this, down to 11, which is my level, and then a pop back up, go long here, and then sell it at 23. That would be cool. I could go for that. Let's see. This is still the first half hour. Good grief. That's been a long half hour. Oh, here we go. That's a poor low, isn't it? So you're long a poor low, so you're long 20. You know there's going to be a seller at 23, 22. Poor low means get long, right? Right there. One tick of excess. I did not buy that. There's your seller at 23, 24. Told you, right? This stuff isn't rocket science, folks. Like I say, if you can draw a straight line and pay attention, it's really all you need. You knew there was going to be a seller there, so had you bought 19, 20, you know that by 23 you're getting off the train. It's simple, right? Poor low, get long, look to the left, see where the sellers are, sell before they can ambush you, right? Because look at the next candle, the sellers have stepped down, right? Now, if that poor low holds, and I'm not really expecting it to, come on. Oh, see? It didn't hold. Because I know if you show that low some size, it'll fold like a card table, right? The only reason it stopped short there is there wasn't enough size. But if you went to that low and you showed them size right off the bat, it would have cracked it and we would have been under 15 right now. Yeah, stop watching the news, Mike. Just watch the chart, brother. It'll make your blood pressure will thank you. Your blood pressure will thank you. I can't even watch I just all I do is I like read earnings news, you know. JP Morgan traders made more than Croesus this quarter. That's all I care about. Oh, don't take out the 24s. Not yet. I'm not long. Ugh. I'm waiting for a deal. Oh, there's sellers at 22. Oh, they heard me. Rats. Now, if this thing lifts above VWAP, your target's going to be 29. Okay. I was being cheap. I wanted this. I wanted to buy here. I didn't want to buy it up here. Sometimes you miss it, right? Sometimes you miss it, especially if you're like me and you're being cheap. So if it clears 26, you're looking for 29. Make sure you get your orders out. I want to see where they sell into it. That's what I'm looking for now. If you miss the move up, that's okay. Sometimes it'll be like you'll get these huge candles and it just goes without you, and that's okay, right? But sometimes it'll show you where the offer is. Come on. Where are you? I know you're there somewhere. Come on. Show yourself. Because unless a seller steps in somewhere here, and starts competing with the other sellers, we'll start printing 28.29. There's a seller. But you see, it's not aggressive. Very sort of ginger. It'd be better for you to wait at the edge, Jonathan. If you wait at the edge long enough, there's the seller. Okay. So the seller moved from here to here. Now what I'm looking for is come under 20. Right? Come under 20, come under 19. I want to buy it, but I want to get the best deal. I'm cheap. I don't want the low, but I just want a better deal than everybody else is getting. I bet you if I go long right here, it'll drop down to like 19. If I went and bought contracts here at 2023, this thing will be 19 in the next candle. It always happens for me. If I try and like chase, I always get it upside the head. See? What'd I tell you? Had I bought that last candle, I'd be getting stopped out right now. Can we get under 19? Let's see. If we can't stay under 19, it'll pop back up to VWAP. There we go. That's what I was looking for. Come on. See, this is why you got to be patient. I was just thinking about that, then I saw it offer 18 and a half. No. The right answer is no. I was going to say yes, but the correct answer is no. The correct answer, Milo, is to be like that old 300-year-old uncle that you have who is so cheap that when a dollar bill goes into his pocket, it screams because it knows it'll never see the light of day again. You want to be the crafty old bastard when you're trading. Cheap. You know, the kind of guy who's a billionaire but lives in a double wide and drives a 1967 Plymouth like, and not even nothing with a Hemi, like something with a slant six because it's good on gas. So if you are buying 19, put some offers out at 20, right? You want to be cheap. So cheap. Don't give these guys at Citadel and Susquehanna, they make $6 billion a quarter. They don't need your $300, okay? They don't need your money. Okay, my friends? Let them go rob somebody else. Tried to buy 18, I couldn't get any. Probably means I shouldn't have been trying to buy it. I should look for a 15 and 3/4, look below and fail. Now let's see. It's a seller at 19. Is it just me or is this market really slow? Here we go. Here we go. There we go. There's the look below. Jeez, that took long enough. Dear God. Yeah, you want to be like Scrooge McDuck. That's who you should be channeling if you're a trader, right? Once again, I'm looking for 75.11 and a half. Or as Raj would say, on the half. Where are you, Raj? Yeah, yeah. Save your money. Seller at 15 and 3/4. Just taking my time. If you're short, that's great. Come on, give me 2 more points. Come on. There's 11 and a half. Just stop shy. 1 tick. I'd love to see it break it and come back over. That'd be nice. Because then we'd be for sure that the level is clean, order flow wise. That M low, there should be some shorts trapped under 9. So if you're buying this area, your stop's going to be just here. I'd wait though. I'd wait till it tags it. Take it out. Come on, give me a couple more ticks underneath. I use market profile, but what I'm really watching here, my friend, is I'm watching the candles and I'm watching the offer, right? So if you're long, make sure you got some sell orders out before 15 and 3/4. This candle is going to tell you where the sellers park, right? The seller's right here now, right? So you want to go long, but you want to make sure that you see offers coming up over the 14s. Make sure if you're long off to my 11 and a half, your stop's not going to be that, I'm long 12 and I sold 14 and a quarter, right on that pop. That's good enough. And then one at 14. Make sure you sell your contracts, right? You know that there's a seller at 14. If it lifts the 16s, the 15s, that's even better, right? And you're still selling and you got 2 left and you got 2 left and you're flat at 15. I'm flat. There you go. That's the trade. Now, for the rest of us, the next candle is going to come, and if it holds 16s, you can take a long, put stops at 18. I mean, sell orders at 18, 18 and a half, 19, 20, all the way up. Okay, but wait, right? 11 and a half worked nice for a minute. A minute and a half. But that's all I needed. Buy a little at 12, sell it at 14, 15, right? It's not a glamorous business, but it's effective. If it holds and comes back up over 16, you're looking for 18. Over the 18s, you're looking for 19 and a quarter, and then 21 and three quarters. There you go. 11 and a half worked like a charm. Thank you. Now I'm going to freak you guys out, and I'll tell you that level is from April 2020. That's where it comes from. Inventory and cost basis, my friends. That's all it is. It's nothing but inventory and cost basis. How much did you buy it? Where is it priced? Where are you selling it? And because the chart is always the same chart, it's not back in 2020. It wasn't a tire shop, and now it's a massage parlor. It's the same business. It's the exact same business. Business has not changed. It gets more efficient because of algos, but that's it. Yeah, I mean, 6-year-old level works. It's off by one tick. When I first figured this stuff out, you still tease your husband about his accent? If When I first figured this stuff out, it would come down to my level, stop like this, and then bounce, but I would never take the trade because I'd be like, why is that working? How did that work? It can't be luck like 15 times in a row, right? It still blows me away. But when you look at how well these markets are built, right? If you look at the underlying structure of the US capital markets and their market making wholesale trader system, you got to remember the wholesale market makers have consolidated, right? There's like 6 market makers. There used to be hundreds. So all the order flow is consolidated, which makes things much more exact. And also with computers will stop selling at 11 and a half, right? Whereas a human being won't stop selling it, they'll sell it all the way down to 7, right? But these algos, it's so exact. It's crazy how exact it is. Well, predictable, man, I wouldn't get into predictable. But there is a good chance that you'll get a reaction there and you can prepare for it and build a trade around it. And you can build a trade that will manage your risk. So had I gone long at 12, my stop was 11, right? So you can build your risk around the business. So I'm buying 12s. My risk is here because if I buy it at 12 to sell it at 15 and somebody puts it on sale at 10, then there's no reason for me to own it at 12. I got to blow out of my inventory just to get what little money I have back. That's why they call it a blowout sale, right? Everything must go. Today at liquidation warehouse, right? See you, Mike. Have a good one. Hey, Harry. What's going on? I don't give anything priority, Jonathan. I treat I'm an equal opportunity level guy. I have no idea what's going to happen at a level until we get down there and hit it with some order flow. I have no idea what's going to, it could have no reaction at all. So that's why you're always on your toes. That's where you're prepared. I was telling you about that look below and fail of 11 and a half when we were up here, right? Do I go over crypto? Well, I don't trade crypto. I buy it and I put it away. So far, that hasn't been the smartest thing to do. Thank God the position size is so small, it's negligible. But I do have levels for the coin of bitterness. Here, let me just show you guys what I got for levels here. And some of my friends are long those MSTR, BMNR weirdo deals. So I watch those. So the coin of bitterness right now, I mean, we've got so much inventory above 65,000. And then like it's just been flushing lower and lower and lower. I would really on Bitcoin, maybe I know people get upset. I'd love a look below and fail of 42,000, right? This is the next place I'll buy if we can get down here. But I don't trade it, day trade it or anything like that. I just buy a little bit and put it away in case the 0 and 1 mafia ever get it together. I don't know if it's going to go to 40K. I know surprisingly little about it. Our target, my friends, is 74.95. So what would be really cool now is a look below and fail of 7,500 or 74.94. Yeah, a little bit of a reaction, not much, eh? Where's that half an hour candle wax chart of ours? Where are you? Where are you? Oh, here we go. So on the half hour candle, see this under 75.10, there's some inventory here. Maybe it kind of goes sideways here. Maybe a look below and fail of 7,500. But we are rotational, eh? Definitely we're in rotation. And that's basically okay because the market really doesn't have any reason to move yet. We have a bunch of earnings this week, right? Yeah, we'll see what happens. Nice. Back up over 11 and a half, eh? Hmm. As they say on the Beverly Hillbillies, I need some vittles. These charts are making me hungry. Thank you, Harry. Yeah, it had to be comprehensive because my life depended on it. Literally. Okay, if we can get back up over 15 and three quarters, huh, I'm curious to see if we have single prints when the next period opens in 5 minutes. Kind of hoping we do. I'd like a bit more back and forth here before, like, I love a sideways market because people don't realize that a market is the, the, the most reliable money is that sideways market. It's just back and forth. It's like playing ping pong. Uh, Now, there should be sellers up at 18. If there aren't, be careful on the short side if you are short. See, there were sellers up here. That's okay. Now, if we start chopping around the 15s and the 16s and the candles start getting smaller, just chill out and wait for the next trade. There's a lot of chilling out and waiting, and we are in a wartime market. So, as Higgins on Magnum PI would say, it would behoove us to be a little bit patient. Now, if we hold 15 and three quarters, see, there's a seller. Aha. See the seller move down from there to there. See? Now you know that there's a seller right at 17 and a quarter. How this helps you is if you're a position trader and say you go long, you buy 50 contracts here and you sell 10, you sell 10, you sell 10. You know that there's going to be some stiff competition here. So you could move your inventory out, right? That's how you use these levels. Now you know where the sellers are. Now if the sellers lift, they're going to go here. Right there. They'll be waiting. They have size. They have no choice. When you have size, you got to sell at these old levels because there were takers there before. See how they front ran it? By a tick. This is useful. If you were long 16, you know to sell at 18. If you were long 14, you better, and it clears out that 17 offer. Have your offers in the market so if when it rips, you sell. So you're not chasing it out. It's over. The opportunity to sell 17, 18 is gone, right? Unless you get it lucky and this thing catches a bid and pops, you just lost your opportunity. That's why you sell into strength. Train yourself to sell into strength. There is the most important thing you can train yourself to do is to make money by taking profits, especially in two-sided markets that are in a distribution or an accumulation business pattern. You don't want to be holding trades and losing money. Get in, get out, get paid. As you gain experience, skill, and capital, what you can do is you can build a position, right? Say you're long 100 contracts in this area. You start cutting contracts underneath 12, right? But you're building a long position because you're looking for this. So you buy your position. Let's see if it holds 12 on the way down. If it holds 12, you can go position long. You know that there's sellers at 19. What a surprise. The top, right where we took that A low, that's where the longs are trapped. There's supply there, right? They have to sell at the same level, Moran, because they have product. When you're moving out size, Moran, you'll sell there because if I made sales there before, it's like knowing, oh, if I go around the corner, my customer is going to be there. There will be buyers there. So that's why they front run or sell ahead of that level. Because if I know there's a seller there, I'll sell here. If I know that I'm going to get ambushed here and I'm long here, I'm going to be a seller here. Always, always, always. Pretty cool. Now, if we lift and this is a look below and fail, you're looking to offload in the 22s of your long. Say you're long 17, right? Using a 16 stop, put your sell orders in the machine so whoop, you get taken. Because all you need is one big short covering candle like you're getting now. If you're long 17 and you're out 20, 21, you're making 3 to 4 points on 5 to 10 contracts, you get to pay your bills. And that's it. Come visit us at Trading Syndicate, my friends. If you want to learn how to do this in a practical way without any double talk, right? We just teach you how the market works. Simple, uncomplicated, actionable intelligence, right? Where you can actually make money. Come check us out at tradingsyndicate.org. Love having you. Thank you so much. Appreciate you guys. Have a wonderful Monday morning and don't take candy from strange market makers. Thanks, everyone. Bye.